Welcome back to another weekly market and financial update. So, the biggest news, of course, is inflation. Inflation has remained higher than expected, and the Fed is unlikely to stick to their three rate cuts this year. It's still possible, but most folks, including myself, I might have been wrong on this one, is that three rate cuts. Again, CPI numbers came out at the end of March, slightly higher than what was expected, and the Fed is going to be extremely cautious about lowering rates too quickly. Their greatest concern is causing a re-escalation of the economy and it overheating again, and we're back in high inflation or much higher inflation than we've been for a while now. So more to come on that, I'm sure, but I think the Fed is going to be very careful when it comes to their response about inflation. On another note, we're in the middle of earnings season, right? So a lot of companies have started to report. For example, Johnson & Johnson has beat their estimates, but not every company is going to beat their estimates, right? Bank of America had somewhat mixed reports. Tesla was probably the biggest headlines that I saw because they're experiencing a global slowdown in electric vehicle growth. And because of that, they had a mass layoff. They laid off about 10% of their employees, which is pretty significant. So again, we're in somewhat of a rocky earnings season. I think that will affect the markets and cause some headwinds. I wouldn't be surprised if most folks see some turbulence and up and down swings in their portfolios over the next couple of weeks between a mixed earnings season and inflation numbers staying persistent, causing those bond rates to stay high and even creep up a little bit. The 10-year Treasury has pushed back almost toward 5%. It's sitting at about 4.83%, higher than where it's been over the last couple of months. So with that in mind, expect some turbulence in your portfolios. We'll get through it like we always do, but it'll be a little bit of a rocky ride for the next couple of weeks. I'm sure of that. And then, of course, on a completely unrelated note, over the weekend, many of you read the news or saw the news about Iran issuing a drone and missile strike on Israel. So while that is a humanitarian issue of its own, and of course, hearts go out to the people that are affected and the families there that are affected. But how does this affect the markets from an economical standpoint? Well, Iran is actually a large producer of oil. And if Israel decides to retaliate, granted they knew the attack was coming and they were well prepared, and fortunately, or I should say, the silver lining here is the U.S. helped to intervene and try to de-escalate as much as we could. But Israel still very well could retaliate, and that could cause a disruption in the oil supply. Again, Iran is a large supplier of oil. A lot of us have noticed that gas prices have started to go up already. I think by me, they've gone up around 10%. They were about $3 a gallon earlier in the year, and most gas stations now are anywhere from like $3.25 to $3.30, at least in my area in northern New Jersey. I can't speak for everyone else across the country, right? But most of us have noticed that gas prices have gone up. Again, if there's that retaliation by Israel, then the gas prices, while they've creeped up again, I think they're going to continue to creep up. Crude oil is probably at about $90 a barrel now. I was checking a couple mixed numbers between 85 and 90, and I would expect crude oil barrels to go up to maybe 105 or 110 a barrel. Again, this is just my speculation on it. Of course, we don't know what's going to happen, but I think that could be a very likely outcome should there be a continued escalation in the Middle East. So more to come on that. I'm sure, we'll keep an eye on the news and expect to see what's going to happen. But just something to be prepared for is that we're dealing with the high inflation, and we might be dealing with higher oil prices throughout the summer, that's when we use gas the most because we're traveling and spending time with family and loved ones as we enjoy the beautiful weather and get out and take those road trips. So thank you so much for tuning in this week. And I look forward to seeing everyone next week. And we'll talk a lot more about earnings season as more companies continue to report. And hopefully we'll have some good news to discuss. Enjoy the beautiful day and talk to you soon.